I'm Jim Jubak, and welcome to my Jubak Asset Management YouTube video for Friday, what is Friday? The 17th. I'm a little confused because this has been my last week in Venice for a while. We're going back to the United States for a couple of weeks to see my daughter graduate from Boston University, to go to a wedding of our good friends, Nora and James. Hi, Nora and James. So things have been a little chaotic. Not knowing what day it is probably about par for the course. Anyway, if you like this video, please subscribe to my YouTube channel. That way you get a notification when we do our next one. I'm trying to do about 3 a week, not always on the same day. If you sign up, which is free, you get a little email telling you, hey, there's another one to look at. If you want more free stuff, you can go to my jubakpicks.com free site. That has 3 portfolios, 12 to 18 months, 5 years, and dividends. And it's free, usually about 1 or 2 posts a day. Been a little chaotic this week. Hope you'll forgive that. Or you can go to my subscription site, which is jubakam.com, which has got those 3 portfolios plus 3 more ETFs, volatility, which includes sometimes some options, and even longer plays beyond 5 years for people who are in their 20s or 30s and have a long investment horizon. Also, you get links to all this down below, as well as when my wife and I moved to Italy in September, a long-term dream of ours, we started a Substack called We Moved to Italy. It's free. Please subscribe. Try to follow our adventures. The one that I'm working on right now is a piece on Vivaldi, which is, he is Venice's native son musician, as well as the composer of 800 pieces of music, ranging from concertos to 47, as I remember, operas, lots and lots of choral works, died in about 1740. So Beethoven here is cutting edge new music. Pretty weird. Anyway, that's the stuff that's going up. If I do it before I get on the plane, and you can find a link to that down below. Okay, so here's what I want to talk about. I want to talk about how much uncertainty there is in the market that really isn't expressed. So if you want to call it the uncertainty of uncertainty right now, I think that's a good one. The uncertainty of uncertainty in the stock market. And here's why. We've got sort of uncertainty piles on top of uncertainty. We had a CPI inflation number that was actually pretty good. It came in exactly on expectations, and it meant that April was going to show slightly less inflation. All items, which includes everything, as the title seems to suggest, at 3.4% annual rate, down from 3.5 in March. The core rate, which takes out food and energy, was at 3.6, down from 3.8. So we're moving in the right direction. And the market has basically said over the last few days that, hey, we think this is the start of a seasonal or a resumption of the decline in inflation, which sort of gets stuck. Theory right now is that we're going to be unstuck, and we're going to see inflation resume its march back down to 2%, which is where the Fed wants it to be. That's uncertainty 1. Is that going to happen? Uncertainty 2 is we don't know what the Fed is thinking. So how much of a decline do they need to see before they say, hey, that's enough and we can cut interest rates? Right now, the market is saying that it's going to see, the Fed will see enough inflation numbers for May, June, July, and August, so they will cut interest rates at the September 18th Fed meeting. That's really the first time this is likely to happen. Right now, the odds in that's tracked by things like the CME Chicago Mercantile Exchange Fedwatch tool, which looks at prices in the Fed funds futures market, say, hey, the market thinks that we're going to have there's about a 66 to 70% chance of an interest rate cut in September. Okay, the problem with that, if you're an investor, is that you're also trying to get inside not just what the inflation numbers are going to look like, you're trying to get inside the Fed's head, which is what does the Fed need to see to make this cut? The last thing the Fed wants to do is make a cut and then have to restore it because the inflation has ticked up again. On the other hand, the Fed doesn't want to crash the economy, so by not cutting interest rates while the economy is slowing. So you've got those two things going on, and it means right now that the market is either A, fully priced at 5,200 on the S&P 500, which is where it is. It's a new record high. That's where we are now. What do we get by the end of the year? Well, the really bullish analysts and strategists start to say 5,600. That's only 400 points from here. It's not even 10%. So we're either fully priced, so this is a wash in terms of the index as a whole, or maybe we've got another 8% by the end of the year. 8% would make this like a 15 to 20% year, which is certainly not bad at all, given how much uncertainty there is. But it's very hard to tell exactly how this is all going to play out in the short term as people try to figure out, hey, what does this uncertainty mean? And it's especially problematic because it's really hard to figure out how you might hedge this. The VIX volatility index is useless at this point. It's just not registering anything that lets you play by options on volatility. The S&P at these prices is not a very good hedge either. So what do you hedge with? Oil? Gold? It's very, very, very tough right now. So you've got a lot of uncertainty, not much chance of hedging the uncertainty, and I think that my take right now is what you ought to be doing is rather than trying to, leverage your bets on the market and its direction over the next 6 months or so. I'd be looking at individual stocks which have stories that say, hey, this is a time to buy this because it's going to go up. So I see Australian lithium producers like Pilbara. I see copper mining stocks, things like that I think are going to go up even if the market basically goes nowhere. So that's where we are today. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get a notification when we do our next one. Free. Also free on my gbacpicks.com site. 3 portfolios, a couple of posts a day. My paid site, my subscription site, that's gbacam.com. 6 portfolios, so it includes the 3 12-month stocks, 5-year stocks, dividends that are on the free site, plus a portfolio about volatility, a portfolio about ETFs, and a portfolio about even longer than 5-year plays for people with their 20s or 30s with longer trend lines, longer time lines before they need to retire. And the last thing is that when my wife and I moved to Italy in September, we started a Substack called We Moved to Italy. That's also free. You can find it on Substack by just searching for that. And we'd love to have you join us for free and follow our adventures. We're moving from Venice, a brief stopover in New York. This is not exactly the easiest way to get there. And then from New York, we're going back to Italy in June, where we'll be moving to Sicily and spending June, July, August, September in a house on the slopes of Mount Etna. I'm excited about being on a live volcano, let me tell you. Anyway, thanks for watching. Bye, and I'll see you next time, probably in New York, but maybe Sicily. Thanks for watching.